All right, September 27th, 2022. Most likely another red day on the market here. We'll see if we can get a little bit of green going, but it's not looking good. It really isn't. And you really start to get this feeling that stuff is not going good. Stuff is really going poorly, and it's going to continue. And this is a sediment that's built in over the last 4 or 5 months or 6 months or so. And I think the general view is becoming more and more pessimistic about the market and business and the economy. There is still some deniers out there for sure. You still hear people, well, this really isn't a recession. We're not in a recession. The jobs are good. Yeah, the jobs are good. They're good right now. But that may be what is coming next. Maybe. But today I just want to talk about a few things in the next 2 or 3 months that I'm really looking at, because I think the next 2 months or 3 months here, especially 3 months, all the way until the new year, are going to be very, very important. And I think I see some really, really bumpy roads. And the first speed bump that I really see, and it's a big one, is that Jerome Powell, the more I look at his speech from the Jackson Hole, the more I really see that he is serious about curbing inflation. Not to the degree that I think he should, because I think he should boost it up way more. They're still playing behind the curve. But he is set on impacting the markets. He knows it. He's even said it. The housing market is going to take some hits. We are going to have to raise interest rates. Jobs are going to take a hit. Okay, he said both of those things. Both of those things have not even happened yet. And the market's taken some hits. All right. What about when that happens? What about when jobs losses really start piling up and inflation still may be going and they still have to raise rates? And that could become a real problem. And I'm not sure when that is going to happen. It could be 2023. But I think there is going to be a time here when jobs are going to take a hit. And that is when you really are going to see shit hit the fan. Because we're not even close to there right now. We're not. But in the next 2 months or so, I'm really going to be looking at tax loss harvesting. People are taking, they took losses this year. And they're going to sell those losses, which are going to drop stocks even more. Okay, that's my prediction. That's what I think is going to happen. You're gonna want to have a lot of write-offs for tax purposes. I'm going to do it. Some of my stocks have not performed well. I'm going to sell those. Why not? Okay, so there's that. Well, we know more raises are coming with interest rates. We know the Fed rate is going up. There is no doubt about it. It is just how high it's going to go here. There's a lot of stocks out there that were overvalued. They were overvalued 6 months ago, and they're still probably overvalued today at 50 or 60 or 70% losses, which means that those stocks are not coming back. They're not coming back. And a big reason why I think that is because a couple things. Number one, the people who are buying those stocks have no more cash. They have no more money. They were the ones propping up this whole momentum drive, this whole hype, and they are out of cash. Okay, I'm sure many of these stock buyers from the EV markets and all the other risky stocks, I'm sure they would love to buy back in all the weed stocks, all the tech stocks, but they don't have any more cash. They're out. And how can you make a stock go back up if the people who are buying it are out of cash? Okay, so that ain't happening. It's not happening for a while at least. Okay, and in the meantime, some of these stocks could go out of business. They could. It could happen. And just really, if you look at things, the populism, the popular view of the economy is going down. And it's got some real truth to it. I mean, things are not going good right now. But before, 6 months ago, a year ago, we really had a lot of momentum. Like, oh man, things are really going good. Keep buying, buy, buy, buy. Now, I've seen the mainstream really grab attention to selling. So that is happening. Stocks are becoming less and less profitable for the common man, short term, of course. A total opposite view and a total opposite momentum drive from 2021. So yeah, we're going to see what's going to happen here. But I think that there's a couple things that have to happen. The housing, just like Powell said, the housing values have to go down. Job losses have to begin. And even though the prices have gone back down for houses, the monthly payments are probably more than what you would have paid 6 months ago. That's a problem. That's a big, big problem. And the problem is, entwined with that, is that people still got money. People still have jobs, and they're willing to take out loans and purchase things that they can't afford. And that ain't going to stop until some people are unemployed. That's just the bottom line. And it sounds ugly, but a lot of these jobs, they were jobs from companies that weren't making any money anyway. So that's got to stop.